Hi, I'm Jarrett Davis, and I was ranked as the second best performing Forex trader in the world by the Barclays Currency Traders Index. Now, this video is first of all to thank you guys for your comments and your questions, and leading on from that, the purpose of the video is to respond to some of those questions. Obviously, you guys are wondering certain things, so I thought I'd make a few videos just to help you guys get a better understanding of what I'm doing. Now, one of the questions we're going to look at today, or one of the topics, is a better way of saying it, is fundamental analysis. As you may know, if you've been following all my posts, I'm a heavy fundamental trader, and that's how I make most of my profits, okay? I believe focusing on the news and the fundamentals will make you consistently profitable, okay? Now, that being said, what is fundamentals? What are the fundamentals? What does it mean? In this video, we're going to explain that. In a nutshell, the fundamentals are basically expectations, okay? It's simple. And it all revolves around the central bank of each currency. So we'll use the US as an example. So the Federal Reserve is the US central bank, okay? Now, their central bank's job is to direct monetary policy. And the reason it does that is to control the economy. So if it needs to get the economy going, it will implement certain tools. If it needs to rein the economy back, if it's expanding too fast, if inflation's too high, again, it will kind of temper that and employ different tools to control it. Basically, its goal is to keep the economy on a nice, straight, stable path, okay? Now, that's important because what the central bank does also affects the currencies very, very heavily, okay? Almost directly. So fundamentals are basically the trader's expectations as to what the central bank will do next, okay? So that's how you do it. So you look at all the economic information, and the market's trying to figure out how will the central bank react to this information, and what will that mean for the currency. So if inflation's getting really high, the central bank will probably raise interest rates, of course, that will send the currency up. So traders will rush to buy the currency, okay? And vice versa, if inflation's low, they'll look to cut interest rates, that will send the currency down, but traders will look to sell the currency way before the central bank even do anything, okay? So it's all based on these expectations. Now, the reason it's so important, okay, is because the central bank make it very clear what their intentions are. So they'll be thinking, they will tell the market through their various statements regularly what concerns they have. So they will basically say, you know what, we're concerned about high inflation, etc., etc. We're concerned about the rate of growth in the economy, etc., etc. The markets then use this information to trade off it. So fundamentals in a nutshell are the expectations of the market and what are they expecting the central bank to do. And whatever they expect the central bank to do, that's the way the currency will move in the medium to long term. So I hope that's helped clear that up. I hope that gives you a better understanding of what these fundamentals are and how it's not so complicated. You don't have to analyse all the millions of different indicators that are going on every week, all these different economic kind of conditions and all these myriad of things that makes fundamentals sound such a complicated topic. It's very simple, and if you focus on the central bank and the traders' expectations and reactions to that, that's basically all you need to focus on. That will give you all the information you need. So, hope that's helped, and I'll be back soon with more videos answering your guys' questions. So keep the comments and questions